And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, friends and traders. Welcome to the market recap. I am Dan Hodgman, and as you can see, not the only one here today, sitting down with Jack. Jack, how are you?
I'm doing great today, Dan. Besides, my lighting fiasco, and they built this building next to me on my kitchen side. I got other windows, but this is where I sit during the day. I promise it's not the hovel it looks like.
Yeah, the tough part about the city is like you get a nice condo, you get a nice place to live. All of a sudden, a building goes up, you lose your view, you lose your lighting. And then you got to go buy more lamps for the house. You got to open curtains you don't usually open street side. People can see in.
I got a really nice view this way, but I hesitate to turn because I got all sorts of crap lined up there. But you know what? The White Sox are starting the playoffs right now, so I am okay with that.
So when you first sat down, I saw the shirt and I thought you were trying to match my jersey. And then I realized, oh wait, Jack's a Southsider. He's got his White Sox shirt on.
Yeah, I just wear it like now when you can see me from here up because I look so dumb when I wear like sports jerseys. I look like a little kid, so I don't do it too often.
The only time you're going to get me to put a sports jersey on is if I'm going to like a Bears game or a Blackhawks game. I'll put on a jersey and that'll be about it.
Yeah. Lots of dumb looking people there.
Speaking of looking dumb, some of these markets did today. They made me look a little stupid. I won't lie. I had a rough day. Market did a lot of what I wanted it to do. Struggled on some entries. Took a little bit of heat today. Still well within my plan. Still well within control. Got a little anxious a few times. At one point, I did recognize. I said, you know what? Everything says this is the right trade. Don't take it. I didn't take it. Things went in my favor. I closed out my platforms and I stopped. So let's kind of just get a quick little run through of all these markets here today. First off, we start with crude oil. Crude oil opened up below settlement price. Nice recovery. Took back all the losses from yesterday. When I say nice, as you guys know, I'm not really thrilled about seeing crude oil go higher. I actually went to the gas station this morning. I had to run and grab some stuff over there. Gas, $3.04 a gallon for regular here in Wisconsin. First time I've seen it over $3 here in, well, probably 2 years, 3 years.
I got some last night for a cool $3.80 in Chicago.
Well, that Cook County tax, that'll get you. Now, the ones that really got me here today was equities. We knew
I was going to ask, where'd you get smoked?
Equities.
Yeah.
So I've been trading NASDAQ a lot more lately. I want to get more in tune with it. I know a lot of our traders are trading it, and it's not a product I've historically traded. I've always been more of an S&P guy, but I've been really working in the NASDAQ. So NASDAQ kind of ate me up a little bit. We saw a nice run right off the open, both equities, both S&P and NASDAQ. We know it's going to happen. Quote unquote lawmakers. I'm not sure why we still use that term lawmakers when they should just be debaters, anything but lawmakers, but we'll call them lawmakers.
Profiteers, social media stars, whatever you want to call them.
Whatever you want to call them. They came to an agreement to not shut down the government, to increase the debt ceiling. Jack, we'll have to touch on that in a minute. So we know equities are going to creep higher, right? And they open up, they took off to the upside. And what I like is both S&Ps and NASDAQ came right up to some BFRNs. Jack, I don't know if you know what BFRN is. Big, fat, round numbers.
Oh, yeah, fat. That's the word we were looking for.
Yes, fat. So we've got S&P ran right up to 4420. So I guess we couldn't call that a fat one, just a big round number. And the NASDAQ ran right up to 15,000. And no surprise, they both rejected. People were long all night. So we had short time frame get long all last night. Those markets started to break down. And they broke down really nicely. If you're looking at a 15-minute chart, you probably even saw, and you guys know me, I'm not always talking 15 minutes, but if you're looking at the 15-minute chart in the NASDAQ, we actually started to create a little bit of a head and shoulders. I see that. We were starting, you could see us hitting the wall. It was like 990 to 985 to 983 to 980, and it just couldn't go higher. Should have been a quick signal to take the short and catch the break. That market's broke 100 points from there. So really good opportunity. If you saw that, recognize that. By that point, I said enough's enough for me. I'm done for the day. So we got equities higher. Gold was down. Gold was actually kind of fun today. Fell into really a nice wedge pattern. We were starting to see it make lower highs, lower lows. We broke off settlement price. We came right down to last night's low and almost down to the regular trading hour low. Euro, there's nothing to say. I mean, Euro's inside. I mean, it's well defined. We rallied this morning right to the overnight high. We broke right down to settlement price. We rallied up once again and then back to settlement price. Guys, we talk about a couple levels each and every day, be it the recap, the forecast. We talk a few different things: overnight highs, overnight lows, prior day high, prior day low, value high and low, and settlement price. And son of a gun, they come into play every single time. And then lastly, 10-year note. No shocker here. We're seeing yields are going higher. You've got stocks moving higher. Notes opened up on settlement price. Settlement price rejected, sent that market lower. We went and made a new low for the week. So, Jack, those are our markets. Now, you're not here on the recap ever. What are you watching throughout the day closest?
Throughout like every day or like
Yeah,
today?
every day.
Every day. I mean, you know me, I take a little bit more of a macro approach to it because I wasn't really much of an outright trader as much as a spread trader. But I have been doing a lot of stuff looking at the equities once again. I'm looking at those moving averages. That's a big thing. It's kind of hanging out both the S&P and the NASDAQ in between those 50 and 100, kind of bouncing off them a little bit. That's what I'll be looking at. I was kind of holding off until the problem is, we always say take a technical look at the market, trend is your friend, stuff like that. But occasionally there's one of these sort of like news bombs that's lurking. In the last couple of days, I don't know, me and everyone else, I kind of felt like they weren't going to let the U.S. default on the debt. And we agree on this. And Dan and I come from different political persuasions rather radically, but we get along on this stuff. But like realistically, what a bunch of like jokers. Like, they weren't going to let it happen, but even the small possibility that did happen, you knew it was going to come out at some point that there was going to be a deal or whatever else, and it was going to send stocks higher because that's the way they go now. And lo and behold, it happened. So
what a surprise.
What a surprise. Well, you know, they only made an agreement to push it back to December. So guess what, guys? We get to do this all again in 2 months.
I was just going to say, the year's not over. There's a lot more still to come. I mean, yeah, we're getting through October here. I don't know about you. I don't know about anyone listening. I'm thinking Thanksgiving already. I mean, I'm planning my Thanksgiving dinner. I'm how I'm going to set my plate up. I'm well prepared, but the year's not over. We got a lot of trading ahead of us. So, yeah. When there's that, I think it's a prime example. Like everyone sitting here knows they're going to reach a deal, right? Even yesterday, we're getting information that's coming out that says, GOP presents an option. Democrat leaders are considering it. Well, that's a prime setup that, it wasn't shot down within 30 seconds. Okay, they're going to pass. They're going to agree. It's going to work. They're going to figure it out. Buy it up. And if you bought it up last night, looking at S&Ps or NASDAQ, you're up, almost got 250 points in a move and took no heat on it. So there's some opportunity out there, to say the least. So really quick, I just want to say hello to everyone. George, good to see you. Ricardo, Frederico. I hope your day was green. If you didn't catch it, my day was not. So it was one of those days where you just got to crack a cold one, get yourself through the day.
I'm still cracking water because I'm still on a baby watch over here. I'm going to have a child sometime in the next week. Not me. My wife is. Oh, also to warn Dan, at some point, I feel that my wife is going to come through that door over there and the dog's going to go nuts. So I'm going to try and mute it right when it happens, but.
That's all right. Sarge goes nuts quite regularly at this time. It's his feeding time usually comes around 3:30, 3:45. So he starts waking up from his slumber and get ready to eat. Let's see here. We got Ricardo, good to see you. Let's do this. Very weak close for the Bulls. SPX hit resistance and got sold. Yeah, we saw that in all of these markets here. Or equity markets. We hit that wall. I mean, it was a straight up brick wall. Let's see. My humble opinion, dead cat bounce on both equities and crude. NQ.
Dead cat bounce. I feel like, we're what, like 5% or less than 5% off all-time highs. I'm all for it. That's an aggressive dead cat bounce, I'd say.
I would say so. See, Jack is in the house. Charles, good to see you. To the moon is a technical term, as Ricardo says, Jack. To the moon. It's technical at this point. It's fully accepted.
I'm all for it. I was all wrong all of last year. Well, once again, that's why you don't trade with your heart or whatever else, with your gut feeling. You go with what's out there, because man, if I had made some of the trades that I was going to try and make last year, I wouldn't have this condo anymore. I'd be out.
Yeah. I've found one of the, I think there's a fine line too, when you talk about this idea of like a gut feeling, right? There's gut feeling of, I think it's going to go higher. And there's gut feeling of like, I've seen this play over and over again. Therefore, I know it's going to work. I think there's those two different guts. It's like things are lining up. Therefore, I know in my heart of hearts, this is going to work. And then there's like, well, it's been going higher. Might as well just keep going. And you take the buy. Like there's the balances you got to take. So Jack, here's a good question coming in from Charles.
Cool.
I'd like to hear your thoughts on this, and I'll give mine. Charles is asking, employment guys, what do you think will mean for equities? Jobs report today was surprisingly good.
So I've been of the opinion, and I like the economic number stuff and in general, like as far as fundamentals, that it's such a casino at this point. It used to be such a more defined range of what you could expect out there. You never used to have these misses of 500,000 jobs or something on every unemployment. I think it's almost been discounted more as a metric. Unemployment used to be the end all be all, but now I'm not always sure people know what to do with it, because it's like the data has been so bad. I guess it's gradually getting better as we come out of the COVID stuff. Kind of. But I still don't know how much conviction people have with it. It seems like with all these unemployment numbers, it'll be bad or good, and then people make their reasons why it's good for stocks.
Yeah.
I don't know. Have you seen anything differently? Like, I can't imagine what would come out. Like, I can't see the YouTube comments here because of the way we're set up, but like, I'm wondering if anyone out there has an idea of what number do you think could come out that would just like tank everything? Is it because that's a good question, right? Because is it a really low number or a really high number? I think it's a really high number.
I think it'd be really low, kind of expected, right? We're seeing more jobs out there, available jobs than we've seen ever. So there are jobs out there, obviously filling them. That's a bigger question. So if that number goes lower, it's like, okay, we're starting to fill these jobs. That number skyrockets. Like, what the hell just happened? Holy crap. Now for me, today's job number, it's great. Like seeing less and less people on jobless claims. Tomorrow, though, that's when the bigger numbers are coming in. Tomorrow is the first Friday of the month. So what does that mean? Every first Friday of every month, employment report's going to come out. You're going to get non-farm payroll. You're going to get unemployment numbers. That's where I think we're going to get a little bit more information. If we start to see possibly the unemployment rate start to rise again, that's going to set some concerns for me. If we start to see it decrease, I think everyone's going to be happy. Now, one thing that, to kind of flip gears a little bit, but also to kind of touch on this topic of like what can make things happen. Actually spoke to a couple farmer friends of mine yesterday. They're in crops.
On the phone, or did you like venture out into the fields doing some investigative?
I do live in the farmlands of Wisconsin. So I ran into a couple of guys, and then I have some friends out in Iowa that own a couple of farms. So I called them. I was talking about them. And one of the things that they all kind of explained to me, and this is what I ran into one of them out in town. Then I started reaching out to other people because I wanted their thoughts. Their costs are getting so high right now. They are telling me, if you can stock up, and maybe they're being a little aggressive, but they're saying if you can start buying some canned goods and stocking them up, because of their costs are so high right now, they think my purchasing food and vegetables and everything like that is going to be up 30 to 40% within the next 6 to 8 months.
I have a question, Dan. I agree with you. The supply chain is a huge thing, but I need a little context here. Are these the kind of folks that would say stock up on canned foods and gold bullion the other 364 days of the year, or what are we dealing with here?
No, not normally the can. No. I mean, no, not necessarily.
See, I don't have enough room over here to, I think in my canned good supply, I can afford the 30-40%, but I don't have a pantry.
Right. Unfortunately, I'm not going to go out and do that. I'm not a hoarder by any sense, but I found that kind of interesting. Not so much the stocking up, but the fact that they're telling me, hey, it's going to go up 30 to 40% in the next 6 to 8 months. Like if purchasing food is a concern of yours, if that's something you're budgeting, you got to pay attention to. I know there's a lot of people
I believe
that are. I think doesn't hurt. They're saying anywhere from 20 to 45% increase in all the supply that they have to purchase just to ship out and get everything out there. And not to mention shipping costs up insane numbers right now. So I think jobs are going to be a huge number to pay attention to, but I think we've been saying this for a while, that CPI number, that's going to be the big one. Paying attention to inflation.
Yeah, because the same reason I was talking about that, I think that a high jobs number could be something that tanks it. It's all because it's a story of the Fed, obviously. And when they're going to start talking about raising it, I always hesitate to say actually raise interest rates. It's always something in the future. I've said before on the show, if you ever look at like the dot plots from the past of what the Fed thought interest rates would be out sometime for the last 30 years, it's hilarious. Look it up if you haven't. It's always higher. They've been looking for it.
Well, let me ask you this, Jack. When is Powell's term up?
Oh, you got me there off the top of my head. I would not know that.
Is it one more year?
Yeah, something like that. I would assume that he'll probably stay in the role. I mean, it's up to Biden, but I think that he's been one of those figures that's not too polarizing. So I don't really know why he would get rid of Powell at this point, but I suppose it's possible.
You would know better than me. You are Mr.
But yeah, I mean,
here.
I just didn't know that thing off the top of my head. But back to the CPI. The CPI is is the pure version of what I was talking about with unemployment. That is the number that everyone in the world's looking at right now. I mean, you saw when a few days ago when we had our first big sell-off in equities in a while. I believe it was because the 10-year hit one of those F for fat round numbers that we're talking about. And, well, not round, but 1.5%. Listen, treasuries don't move that much. You got to make 0.5 a whole number at that point.
It's a big deal when it hits that 1.5% there.
Yeah, which is incredibly low. I've seen crazy sort of sensitivity things that seem to think that like we have 5% downside in the markets for every quarter point raise or something like that. It's a big deal. We've been in when I started my career, I'm used to saying 30 years, but really like a 40-year cycle of decreasing interest rates, and there's really nowhere to go anymore. So that's something that's the biggest thing that I'm watching, is whatever affects everyone's perception of what the Fed's doing.
Yeah, I think you're spot on there. And it just, one of the things here, we got to think about this in that day trading time frame, right? Don't let it overwhelm you. Think it through. Trade what the markets are telling you. It's not our jobs always to sit here and think where's things going to be in 6 months as far as day trading. Now, I know everyone out there, myself included, we have to have opinions long term, because day trading can't just be the only thing that we're doing. We got to have some longer term stuff. I have a lot of it on. I know Jack's got a lot of it on. And I got a feeling every one of you guys out there has a lot on. And so thinking about that long-term stuff, wrap your head around it, do some research, think it through, and maybe you'll start to, we'll start to get some answers here as time continues to go forward.
Absolutely. I have a question, Dan. It's happening. The dog's barking.
She's home.
I think she is. I have a question, Dan. So when you got smoked today, what you lost, what was it in terms of your average winning day? So how big was the loss compared to your average winning day?
25% of a winning day.
Ooh, that's a really good ratio.
Yeah, it was pretty good. I did 25% of my average winning day. And if we're going to get really, really specific here, I went at about 63 to 66% of my days are profitable. So there you go.
Really?
I'll get extremely transparent with everyone. This was one of my worst down days I've had in a while. I was frustrated.
Your head's in a good spot though for tomorrow. Are you gonna get back at it for unemployment or
no?
No. Oh, good.
No, yeah. I'm not. I'm frustrated today. I was angry. The BFs were not fat today. They were a different F. Mm-hmm. I got frustrated. Had to put a hat on. I did my hair this morning, and now we have a hat on. I got a little angry, and it's all personal stuff, right? We recognize these things, and these are things that we all have to go through. Just recognize, hey, I'm seeing it, but I'm not executing properly, and that's all it was for me. It just was not executing right, and I kept it controlled, and I felt okay with that. I can't complain. It's still a green week. I'm still walking away. Not concerned about anything. Bills are paid, and I'm putting money in the bank. So
no, that's a good mindset. You can use that money to buy some meme stocks. I heard we're going to talk a little bit about those too.
Well, yeah. So Jack is new here to the recap. As everyone knows, we kind of run through a couple different things. And obviously at the beginning of the year, we bought Bitcoin. We bought Bitcoin at $34,000 a coin on the 6th of January, I think is what it was. And then we bought Airbnb. Airbnb had just gone public. I had bought some right off the open. I've been watching it pretty close. We had talked about it. And we bought Airbnb at $148 a share. So first off, let's talk Bitcoin. I pulled up a Bitcoin chart and then I closed it out. Here it is. Bitcoin right now, $54,690 a coin. So we got a nice $20,000 into our Bitcoin that we bought to start the year. And let's take a look at our Airbnb. Airbnb, Jack, has been actually pretty fun to watch. We were peaking up at 180 back in May. Summertime hit. And honestly, I just thought Airbnb would do well in the summer. Everyone's traveling, still no one's working. And, you know, COVID restrictions kind of lightened up. And I thought, sweet, Airbnb stocks can go. Broke down on us. And we've been creeping back today, $169.60.
Well, they're facing the same problem that Uber and a lot of those platform companies are, in that they were subsidized for years. The prices that you saw when you got an Airbnb and an Uber were subsidized by venture capital money coming out west. And there's no such thing as a free lunch, Dan. You always say that. And eventually you got to pay the piper. And now those folks that laid down 70 billion in Uber or whatever, they want their money back. So that's why you look at the Uber now. It's in Chicago around here. I hardly take Uber anymore because it's at least time and a half as expensive as it was last year.
Easily.
And you lose a market at some point like that. And I think Airbnb is facing the same thing, where if you look at an Airbnb now, they're a lot more expensive than they used to be. Meanwhile, you know, you hear stories all the time. Who wants to take $150 Uber from O'Hare? People just, at a certain point, out of principle, I will just take the blue line. We came back. We took our dog with us. My wife's family lives in Seattle. First time we ever took the dog on a plane. Huge pain in the ass. I don't recommend it. We come back. We have our dog with us. We got 2 big bags. My wife's pregnant. The Uber back is going to be like $100+ and I live like off the blue line. I live like 9 miles from O'Hare, and the taxi line's like an hour and a half long at least. And I just said, F it, the other F word. And my wife agreed. We're just going on the blue line. They don't even allow dogs. I kept the dog kind of half in the bag, half not. Everyone thought it was very cute, but you know what? Broke down, just took the blue line. It was uncomfortable, but it wasn't $100.
It's funny you say that, because last time I was down there, I was flying out of O'Hare. I was down in the West Loop, and historically, I've always just got a limo, scheduled it through a limo service. It's a lot easier. Because I'm usually running a little late in the morning anyhow when I got to go to the airport. And I was down there, just me, and I'm flying out to Colorado to go skiing. And I looked at Uber, and it was like $95, $100, a couple hours before my flight. And I go, all right, well, I'm not paying that, but I'm not getting on the blue line with my snow skis, and my ski boots and a giant bag of clothes and gear. I called the limo service. I called them up and I said, hey, what does it cost to get to the airport in the next hour? The guy's like, do you need a SUV or is a town car work? I go, as long as the town car can fit my skis in it, we're good. And the dispatcher's like, I can have someone there in 20 minutes. It'll be $72. Yeah, pretty expensive, cheaper than the Uber. Saved me from the blue line fiasco with skis.
Back to our original point, that's, I think, why these companies are struggling right now. Ultimately, you got to find people willing to do it. I always thought the prices were crazy low. Speaking of prices that are let's get memeier even. Prices that are crazy steady. Like, is anyone else shocked out there that GameStop isn't moving at all?
Well, Jack, that's the next stock we look at every day. GameStop now, it's only been, I think, a month ago, we were over $200. Yeah, September 17th, we were over $200. We were $204.97. So let's call it $205 today. And it's been on a steady decline since. So now we're down about 13.5% since then, down at $172.12. But it's holding really steady for the last week or so, right around 170 to 180.
Well, it's wild. You see today, we have some pretty big moves in the equity indices, and GameStop is just in this narrow band. I think it's just because it's all option stuff back and forth. I don't think there's that many people right now that want to buy the stock higher. They're just waiting for some catalyst. It's been following this thing for a while, and I know you've probably talked about it on here for days, where it kind of like drops down and it gets to some point and then it spikes up very rapidly as people think, oh, people are getting short now, let's try to squeeze it again.
Yeah.
I mean, I'm watching it.
And the same thing's happening with AMC. AMC's been another one we've kept our eye on. AMC's been pretty interesting to me. I can't think of the last time I was at an AMC. This stock continues to hold anywhere from $30 to $40 a share. I mean, that's astronomical in my opinion.
That one's funny, where I saw these comments the other day. I guess some movie that came out this weekend had, maybe it was Venom or something, had the biggest opening or something since the pandemic or whatever. And on Monday, there's all these comments that are along the lines of stock should be skyrocketing. There's this big release happened over this weekend. It's like, if you think this has anything to do with people going to the movies right now, I don't know what to tell you. Like, this is
right.
You could be right or wrong saying it's going to go up or down, but it doesn't really have to do with what the business is, right?
No kidding. Real quick, I just got a comment here from Let's Do This. Thanks for sharing, Dan. Glad to hear it's not only me. Trying hard not to be emotional about it, but it's hard to see my money get churned up. Didn't trade earlier futures, but earlier this week got chopped up. Just really quick, Let's Do This. Just so you know, we've all been there. Trust me, it gets emotional. I kid you not. There were a couple times today I hit the desk. I was getting irritated. Fortunately, I've been around for quite some time doing this, and I know where that term tilt. If you guys listen to the Limit Up podcast, Jack and I had really some great conversations about tilt. Go listen to it. The more you do this, the more you recognize. I knew today, if I really wanted to keep pushing it, if I wanted to keep trading throughout the day, it could have happened to me. And I get frustrated that I even push myself to a point where I'm considering pushing it extra. So that's where that frustration comes in. It's totally okay. Take tomorrow off, make it a long weekend, and get out and relax.
Yeah.
All right, Jack, couple of things to touch on, and we'll get on out of here. First off, stocks are up. What does that mean for VIX? VIX is back down below 20 for the first time in about a week or so. So calming down. but not down that much, 19.5. So still pretty strong.
Yeah. There was a while back there where the VIX, and this was a couple months ago, where the VIX and stocks were both rising, which is highly unusual, but it kind of shows you where people's minds are at these levels.
Absolutely. All right. And lastly, Jack, we like to finish our day out with a little non-trading stuff, non-financial stuff. This date in history, I like to pay attention to it. So I think we have the potential that on October 7th, 2021, the Chicago White Sox began their World Series run before they raise the pennant. So we'll say that's about to come up. And then other than that, nothing too exciting. I thought I had one more, and for some reason I did. 1983, Sean Connery came out as James Bond in Never Say Never Again.
That movie was so pure early 80s cocaine fueled nonsense. But it was wild. Good for Connery. Still hanging in there. Way to go, Sir Sean.
All right. So that's what we got for us here today on the Market Recap. Jack's going to be joining us regularly on Thursdays. Every Thursday, we're going to try and make it a little bit more exciting, a little bit more fun. Appreciate everyone chiming in here today. This was a blast, Jack. Thanks for sitting down with me.
Of course. Next time I'll crack a beer. It's the first inning of the White Sox game now. So good stuff.
I got one
Go
cracked
Sox.
to get me through this afternoon. I got a lot of yard work ahead of me. All right. So that's it for the market recap today. John will be back tomorrow morning, 8 a.m. Central Time with the market forecast. So until then, everybody stay safe, wash your hands, trade smart, and trade well. Look forward to seeing you guys